Good morning, ladies and gentlemen, and welcome to the GTECH Group PLC investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged. They can be submitted at any time via the Q&A tab that's just situated on the right-hand corner of your screen. Please just simply type in your questions and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company can review all questions submitted today and will publish those responses where it's appropriate to do so on the Investor Meet Company platform. Before we begin, as usual, I would just like to submit the following poll, and if you'd give that your kind attention, I'm sure the company would be most grateful. And I would now like to hand you over to the board from GTECH Group PLC. Richard, good morning, sir.
Good morning. Thank you very much, Jake, and welcome to GTECH's annual report presentation. This morning, our agenda is really a few things. We've got one. Firstly, I'd like to give a quick overview of where we are with the company. We've made many changes this year, so I think that's relevant to both new and existing shareholders. We'll talk a little bit about our strategy moving forward, the financial results themselves, the outlook for the business, and then we'll open up for questions and answers. So, as I say, this has been quite a year of change for GTECH. It's been much about, we've been sort of resetting the business and going back to really the core business of where we're at, which is subsurface exploration, and really galvanizing all the team around kind of the mission of accelerating the clean energy future by locating the subsurface resources that are vital for the energy transition. And as part of this energy transition, it's very much well underway. The clean energy future needs many, many more discoveries. It's, so many statisticians and economists will tell us it's like $12 trillion worth of new subsurface resources need to be found in order for the renewable energy transition to happen, be it for electric cars or cabling or batteries and so on. This has to be found. So traditionally, GTECH was very much helping companies find petroleum reserves around the globe. And we're still in that business. We're not letting go of that business. It's an energy transition. People will still be looking for sort of petrol or oil and gas resources, and we're there in that business. But what we really have been making a very, very big effort in the last 12 to 18 months is to widen up that net and look at the other subsurface resources. And the areas where we're really focusing in on it is natural hydrogen or geologic hydrogen. This is very much a nascent industry. It's yes, it is a gas, but it's formed from rocks. It's not formed in the same organic ways as oil and gas is. So we're helping a number of companies in this emerging sector. We're very much looking at critical minerals. Our data and skills are very relevant for looking for battery metals such as sedimentary copper and cobalt and nickel, etc. Our data also and our skills are very much in demand for looking for geothermal projects and heat gradients around the world, as well as looking for carbon storage sites and energy storage sites around the world. So what we've really done is widened the addressable market for GTECH sort of products and services. And we've gone back to basics. We're delivering this through Globe. This is our geoscience platform where we contain our sort of data and workflows and analytics. And we're using this to help world-leading sort of exploration companies sort of locate resources around the world. And over the years, GTECH's got a great sort of recurring income from existing customers such as Shell and Eni, and we've added a number of new customers over the last 12 to 18 months, including Anglo American and Casario and Eaststar. And through Globe, what we're doing is we're delivering sort of our products and services, 4 sets of products and services. Number one is we have the largest commercially available data set of magnetic and gravity data, and that was in Globe, and our clients have access to that data. The second thing we've been doing is when you've got all of that data and all these things to look for, it's how to speed up the process and make things more accurate. So we've been focusing a lot of time on machine learning tools over the last 18 months and implemented these for our clients. We have various geoscience workflows that are very specific for looking for things such as geothermal, heat gradients, and shale gas and others. And we have sort of nearly 50 geoscience experts that are in the consultancy to actually help people make more use of that data. And how the actual platform itself works, many people may have seen this slide before, but basically we aggregate many types of raw types of data, be it gravity or magnetic or Earth observation data. And then we do a lot of work within the supercomputer to match this, harmonize it into one Globe data set that people can use through the Globe platform. We also add a lot of data to that, where a lot of computer science power to that, where we look at how the Earth was formed over plate modeling over sort of 400 or 500 million years. We look at climate data. We estimate where the climate were, and all the things that people, so geologists are looking for, geoscientists are looking for to actually make use of this data. And then we guide people through the workflows to actually help them look for what they're actually looking for. So it's kind of like the Earth's digital twin for the subsurface, if you like. And the big thing that we've added this year is we've been really trying to focus in and make the most out of our advantage of machine learning. We've been doing this for a long time, and I think so it's become fashionable in computer science terms. But we've really been trying to expand as well to deepen our own sort of activities in this space. And what we have here, so what we do, so one of the biggest advantages GETECH have is this global data set. And what we do is we take known mineral occurrences for certain types of things, such as copper. We look at where all the copper mines are around the world. And because we have those coordinates, we can look into our data, and then the machine learning takes over and says, well, what's the common points within these kind of known sites? And where else can we then apply that genome? We can use the search to actually go through and find where the same sequences or similar sequences occur on the planet. And that really helps sort of these larger exploration companies zoom in with the big question of where should we start looking? And using all of that power, it takes a lot of manpower away from the actual, so at the beginning of the exploration process. Doing this, it's very much key to work with a variety of academic partners, research and development partners. We have a long history of working with Leeds University. And this year we've added sort of Manchester Met to our list for working with the AI, and particularly with Imperial, working with them on our IL algorithms for how we can actually work to really make the GETECH sort of data accessible and usable amongst our target customer bases. And we've been working on a number of different projects across the year. And Chris, maybe I can, hand over to you just to maybe give a quick summary of some of the projects we've been working on.
Sure. So as Richard said, we continue to work with our customers who are looking to find oil and gas. That stays the same. But we just thought we'd put up some examples of projects in these other kind of areas that we're looking at. So on the left here, we have natural hydrogen. We've been working with an organization who has defined a kind of fairly large search area across North America, and we're working with them to find the most prospective locations for geologic hydrogen within the subsurface. And what we find with hydrogen is that our data, which you can see in the picture there on the left, really is really useful for finding the source rocks for hydrogen, and they actually show up very well. As you can see in the picture, there's some sort of white polygons that show where the source rocks are, and you can see them mapping really nicely to our data. The middle one is an example of a machine learning output. We're working with a company who's been looking across Eastern Europe for particular types of copper. There are a number of different types of copper. This particular example is for sedimentary copper, which is why you'll see some bits in Africa don't light up, because those are porphyry coppers. But the idea is we use our data, we take the points of known copper occurrences of this particular type of copper, and then we use our machine learning algorithms to predict where there might be similar geologic conditions that have been as yet underexplored or even unexplored. We have seen on the back of this work some of our customer partners actually taking up significant licensing positions based on our work. And then finally, on the right-hand side, carbon storage. We worked 2023 with the NSTA, which is the organization that manages the UK continental shelf, and we helped them high-grade areas of the North Sea for use for potential carbon storage projects. And the result of the work we did, both on our data and on the NSTA data, was that the NSTA defined a number of license areas which were put on offer for the UK's first carbon storage licensing round. and they received 13 bids, and those projects have now gone onto the subsequent phases. So just some examples of projects where we've been working in these sort of non-oil and gas areas.
Thanks, Chris. So maybe we'll have a quick look at the business strategy and how we've actually been repositioning sort of GETECH. And what we're seeing is data exploration is becoming a real interesting hot topic within the tech community. I think you look at the sort of the wider tech industry, there's also, so, with electric cars and all the other things that we need to electrify to make the renewable energy industry happen, we have to find more resources. And out of that, the tech industry needs a supply chain of these sort of critical minerals and resources to make that happen. And furthermore, off the back of that, we've seen nearly $500 million flow into companies like GETECH from tech investors trying to get into the critical mineral sector. The biggest, most high-profile one in the States was Cobalt Metals, which became a unicorn off the back of a $200 million investment from Bezos and Elon Musk and Bill Gates, all about finding copper and lithium for their supply chains. Very similar story with Coloma, again, nearly a unicorn, looking for natural hydrogen. Again, tech investments gone into that. Another company, Zanska, got its Series B away, 30 million for developing an AI tool looking for geothermal projects, which is very similar to the GETECH heat seeker product. And more recently, in the last few weeks, Terra AI just closed their 3.4 million round for a Series A from Coachella Ventures to look at how to use AI to find copper and lithium and cobalt. And we have GETECH at the end, where we have more data than any of these companies. We've already got our kind of routines together for our AI together for looking at sort of copper and geothermal and natural hydrogen. And we think we're really well positioned to actually now start making traction and start bringing in the larger investors to really see how we can actually make this company, to transform it into a much bigger sort of enterprise over the coming years. And at the end of the day, it's all about money. So what we've really tried to do is do two things to sort of advance the way we're doing revenues. Traditionally, so GETECH sort of has always, its customer base has always been the global explorers, particularly the international oil companies, the national oil companies. And more recently, we've been adding to international mining companies to our roster of companies. And that's because, the accessing sort of GETECH's data is expensive. The typical AAR for people buying into the Globe platform is 200K per year, and the associated services with that. But what we've been doing, first of all, the first thing we've been trying to do is make our product more accessible to the wider market. So by changing one of the things we've done this year is to change our business and subscription models so that we can work and target with the region explorers. So that's sort of a lot of the listed oil companies, listed mining companies, drilling, geothermal, carbon storage, energy storage type of companies. And we've got a lower entry point for these smaller companies, which is typically around sort of 50K per year to actually do that. But the difference we've made is we don't want to sort of undervalue our data. So we're actually bringing in a royalty to this. So you'll have seen with recent examples, we closed with a Spanish company recently looking for natural hydrogen, where we have good revenue from the client, but also a 5% carried interest to actually on any successful finds that we actually work with them on. And so on. So going further down the chain, there's a huge number of very junior explorers out there. And what we're looking for is working with interesting companies that have got good local teams, but they need more data to actually help them zoom in on their exploration projects. And again, we've got a lower entry point for these clients, which is typically around 20K, but we're asking for a much larger royalty interest, starting at 5%, depending on the project, to actually work with them and to make value out of our data. What we're trying to be in a position with, like, none of the service we're doing is going below sort of our cost base, but we're really trying to change maybe the way the upside actually works, so we can address a wider area. And as we progress with this business model, we're trying to do more things for these clients and get the value of the AAR to go up and build a portfolio through of these royalty-based recurring interest agreements with what we're doing. So from GETECH's point of view, from this year, it was 2023 was a very, very painful year in the sense where we've sort of really started the year realizing that the green hydrogen space was an incredibly difficult market to be working for. Green hydrogen will probably happen in the industry, but GETECH with it's where we are, who we are, and it wasn't the right business, right fit for us. So we've closed H2 Green as the time progressed. We've restructured. We've been have a lot of assets with Kitson House. We've managed to sell half of our property office. We've still got one left, which is Nicholson House, which we're working on, and reduced headcount within the business. And all that's been about is resetting the cost base so that we can move successfully into 2024. And I think the objective I've stated many times is we're trying to get the business back to cash flow positive and into profitability as quickly as we can. And taking those hard decisions to reset the cost base is painful but vital to make sure that we can grow. And now I think the company's in a very good place. We've got very clear products and plans, and we're developing out on two axes really. The first is the sales and management, sales and account management, where we're going to look to add new logos to Globe, more subscribers to Globe, and try and get stronger account management within these people and get more value out of the existing clients that we've got. The second thing is we're expanding our business development team so that we can look at more of these strategic partnerships and look much more at these joint exploration agreements. In areas where nascent industries like natural hydrogen, we think there's a lot of value that we can create quite quickly for shareholders by getting involved, by earning royalties for the expertise that we want to work into this. And to be really clear, that doesn't mean we're going to be investing in these projects. It means we're actually kind of investing our time and coming in at them at the ground floor level. So we'll talk on now talk a bit about the financial side of how 2023 looked. So as I've already stated, we really taken a very, very hard look at the cost control of the business. So we've closed the H2 Green. We've reduced headcount across the group by 22%, and we've been seeking development partners to try and extract some value or hand over the value of the H2 Green projects that were there, and we'll come on to those a little bit more detail in a few minutes. We put a lot of time into expanding the Globe platform. As I was saying, we look at these genomes and how to make these work very much for the things that people are really looking for in the market at the moment. So natural hydrogen, so lithium, and so on. We're really keen. One of the things that's been really successful over the last year, what I'm really pleased about, is we've done a lot of work in diversifying our revenue. So some of our new customer wins have been like with eStar, looking for copper in Kazakhstan. It's been a joint exploration agreement with a European company looking for natural hydrogen. It's been a very interesting project for us to be working on with the team. We've been working with Casario in the US, looking for carbon capture and storage sites for some of their clients. And we've been looking for geothermal gradients across Eastern Europe. So we've really made really terrific headway this year in terms of actually getting good reference clients in the areas that we actually want to grow into as a business. So outside of the oil and gas, we're actually getting into these wider energy transition markets. And the other thing that's really a big change, I think, and will really how I want investors to think about us as we move forward, is we've moved it from its sales-based model to a subscription model. So the key performance indicator for the business is ARR, annual recurring revenue, for how we're actually going to be operating. So as I said, my first goal is we're trying to get the business back to cash flow positive. Our second goal is to get ARR above our cost base so that we're actually really successful, really stable business as we actually then approach our future. And the other thing you'll see, hopefully it hasn't come into place yet, but it's work in hand with the exchange. We're trying to get away from being labelled or classified as an oil and gas services business and into a technology platform business. And the reason for this is twofold. I think one, in the energy transition, that there are people out there that say, you're an oil and gas company, we don't want to work with you. And it is dragging us, it's making life a bit challenging. And secondly, I think investors will understand and I think will appreciate is technology platforms get a higher sort of rating, an IAR PE rating for what they're doing. And as we move back into profitability, we think this will sort of really help us sort of set the value of the business within inside GETECH. So what I'll do, I'll give a quick summary of where we are results-wise, and then I'll hand over to Andrew to talk a bit more in detail on the loss and how that occurred and why we're confident it won't happen moving forward. So revenue was actually down, but it was 4 million. That was pretty well flat on where we were on the 2022 revenue was slightly out of kilter because there was what we'd call a transfer payment, which raised things out. I think on the core business, the revenue was sort of fairly flat, although it's showing it down from here. There was a 5 million loss, and Andrew will talk about the exceptionals and how a lot of that was about restructuring. The good news is we've maintained the order book, which is at 4.6 million. So we know we've got this future revenue sort of coming into the business. Cash has been very light. We've been trying to enforce financial discipline on the business of getting ourselves into cash flow positive mode and really trying to live within the means of the business, so that it's all part and isn't changing the culture of we're trying to get back into a profitable business role. And the good one is here, as I was talking about, is AAR. This is the new metric that KPI that we want to see, that I'm really measuring the company on as we move forward, which is 2.8 million at the moment. Where our cost base is at around 5 million, we're trying to grow this, and it has been growing year on year, and to get us back to over 5 billion and make a very stable business. So Andrew, maybe you want to just talk us through how the income and loss.
Yeah, thanks, Richard. So this chart helps to break down the revenue and also the costs within the business, which takes us to the 5 million loss for the year. So on the left-hand side, we've split the revenue by the different sectors that we've been working in 2023. And on the right-hand side, it splits out the costs. So 1.5 million of the costs were exceptional items, and within there, around 1 million of that was impairments on the balance sheet, and the other 500,000 related to restructuring. Approximately in total, around 2 million of our costs were related to H2 Green, and the balance there is about 5.5 million underlying costs within GETECH. And going forward, that's where we expect our costs to settle during 2024.
Thanks, Andrew. So quickly, just touching on H2 Green, I know there's a few people interested in that. We've actually closed the Edinburgh office. With the Inverness project, we've transferred it to a strategic partner, and there's a small earn-out that we'll achieve if that comes through. With the Shoreham project, we are still engaged with this, and we are trying to find and work with the team there to find a development partner that will help actually move us forward. With the other restructuring activity, we've sold Kitson House. We've still got Nicholson House for sale, which the risks value on that is 850k. And we put a little bit of bridge financing on that at the moment to help ease with the cash flows. All in all, we're trying to sort of selling Nicholson House is very much contingent on how the company was intending to run its budget this year, and that's still in process. The good news that we're very excited about is we're continuing to diversify the revenue. So this year we've sort of got a lot more critical minerals, a lot more geothermal work, and working with sort of the carbon storage and the emerging market within the natural hydrogen and clean gas kind of market. So just touching, sort of really the metrics of where we are with at the moment with our customers. The top 10 customers for GETECH have been 100% sticky since we've been working. Typically, the average is 198k that we're getting for annual subscription from the top 10. And then we're typically getting about 80k of ad hoc services from these people. What we're looking at is the on the projects. As I said, we've exited Inverness. That's now with the company. With Shoreham, we're still working through on that. But the exciting thing, and what I'm going to be doing, what the team's going to be doing over the next year, is trying to add more of these joint exploration agreements within it. So there's no cost to the business. This is about leveraging the value of our data when we make sales. So we engage with East Star, as I said, for copper in Kazakhstan, and we're working with another European company looking for natural hydrogen at the moment. Unfortunately, they want to stay anonymous, but it's been a very exciting project for the team working as we move forward. So current trading, where we're going, we've really reset the cost base. I'm sure those questions will come up. The cost base is running currently at about 5 million per year. We've had a very good start to the year in terms of sales, where for the first 5 months, we've been up. 4 months, we've been up at 17% on the same period last year with that. And the AAR is slightly growing. We're up to 2.9 million and trying to move forward. We've got a good customer pipeline of about 10.4 million of new business. What's been a very trend of, I think, 2023 is a lot of decisions got delayed, but we're seeing the benefits of that pipeline now coming into 2024. I don't think we're going to be closing all of that this year, but that's the outlook and visibility of projects that we can currently actually see this year and over the next sort of few years within our customers. A lot of these mining type of exploration projects that are planned many months and even years in advance. And we've really got a very, very clear business objective for the year. We're focusing on increasing sort of Globe's retained customer base. So that's new logos and increasing the value of Globe and to drive the AAR within the company. Business development team looking for joint exploration agreements. And as a management team, we're really targeting getting to that EBITDA cash flow positive by the end of year. And from an R&D perspective, we're really focusing on sort of improving, sort of honing our seed genomes in the critical mineral sector and the natural hydrogen and helium. There's a lot of things we can look for, but those are the ones that the clients are seeing the most value from at this point. So 2023, it was a really tough year. We took all the hard decisions. I think we've taken all of that out, and we're really now going forward on a good research, a much lower cost base, very simplified, clear sort of goals and objectives within the team, which makes the whole thing a lot more easier to manage. And very much look forward to carrying on this year. So with that, I'd like to thank you from the board on GETECH. And Jake, maybe we can hand back to you for question and answers.
Richard, absolutely, and Andrew and Chris as well. Thank you very much indeed for your presentation this morning. Ladies and gentlemen, please do continue to submit your questions just by using the Q&A tab that's situated on the right-hand corner of your screen. But just while the company take a few moments to review those questions that were submitted already, I would just like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard. Guys, as you can see there, we have received a number of questions throughout your presentation this morning, and thank you to all of those on the call for taking the time to submit their questions. But Richard, Andrew, Chris, if I may just hand back to you just to read out those questions and give your responses where it's appropriate to do so, and then I'll pick up from you at the end. Thank you.
Thank you. So the first question is why did GETECH and H2 Green not apply for the HAR1 and HAR2 revenue support? And I think this is something that we agonized about as a board and really tried to look at this from every angle that we possibly could. And I think the option there is still actually open for us on Shoreham, but we declined on Inverness. But the reason for this is it was going to require significant funding to really push through the pre-feed and feed functions for that, which the company didn't have. We'd have had to have raised that money either at a project level or at a corporate level, at the topco level, to actually get there to make it happen. So there had to be a really compelling case to go back to investors and ask for the additional money to do that. And when you look at that compelling case, when sort of H2 Green was actually started, that there was a very distinct government policy that was sort of kind of like that they wanted to see 10 gigawatts of green hydrogen in the UK as quick as possible. But that really then, so three prime ministers later, in a 2-year period, the policy really got diluted, and the need for green hydrogen really sort of came off the boil. The market sort of very much sort of gravitated around looking at green hydrogen for industrial processes, whereas all of HT Green's projects were actually about transportation. And there just weren't early adopter customers or route to market for green hydrogen going into transportation hubs at this time. And with that, if there's no customer, there's no chance of getting to financial close or to FID. And therefore, we just didn't think HAR1 or HAR2 would really add anything to it. It would just be a lot of cost to the business. It would move the business, advance things on. But as I say, we'd have had to have raised money to do that. And we didn't think the investment case was compelling. With Shoreham, we very much been trying to keep all of these sort of projects warm, if you like, for as long as we can. I suspect we might have a new energy minister in a week's time from now. And then Miliband has been very much promoting green hydrogen, and that might come back into vogue again with Shoreham and so on. But at the moment, as things stand, it just wasn't a business decision that we could actually make. I hope that answers the question. We're always available online or offline to actually do that, to answer further questions on that subject. And we know how much money went into it, and we really did try to preserve as much value as we could, but it was a tough call. How has the refocus on core competencies improved the company's efficiency and market positioning? Can you give specific examples of projects? I'll give you projects, Chris, but the core competencies, at the end of the day, GETECH's got a 30-year history. We've got sort of 50 members of staff. They're all geoscientists. So that is the core competency. It wasn't green hydrogen, which is like surface-based. So by sort of bringing in what we've been really doing is sort of bringing in new business that complement these core examples. And I think you may have covered it in the presentation. Really, that is sort of how we've been applying, not just how we're taking all the old skills that sort of our team have sort of multiple PhDs in everything from underground waterfalls to everything. We have very, very advanced subsurface knowledge, and we've been now applying that to things like natural hydrogen. Maybe natural hydrogen's a good one. Just maybe give an example of.
Sure. Yeah, I think this question did come in before the slide came up with the project examples. But the sort of refocusing back on core competencies has really led, actually, over the last sort of year or 18 months or so, led us to look again at where our data and where our expertise is. It's a good fit in other sort of non-petroleum markets, and certainly. Arguably, our kind of foray into green hydrogen sort of led us towards natural hydrogen, and it turns out that our data, as I explained when the slide was up, is actually really good at finding the particular types of rocks that are certainly one of the key sources for natural hydrogen. They're called ophiolites, and they can appear at the surface. You're probably not going to get much hydrogen out of those, but if they're subsurface and we can see those in our data, then they could potentially be natural hydrogen source rocks. So, a really good example of how looking back at our core capabilities and seeing where else they apply can bring value back into GETECH.
Thank you, Chris. So the next question, given the reaction of the market to your financial results, it looks like a placing will have to be considered at a considerable discount and adversely impacting existing shareholders. Do you have any alternatives in way of funding? So I think this is a very challenging situation for us. I think the share price, and something we're going to be working on now over the coming weeks. When we set out the budget for 2024, it was very much predicated on that we would sell Kitson House and Nicholson House, and the money would be used that we would actually take the business to cash flow positive on that basis. So we've sold Kitson House. We haven't sold Kitson House. The RICS value on that one is 850k, and we're working to sell it as quickly as we can. Without that in place, that kind of leaves a gap for us in getting to cash flow positive of around, so in that kind of, don't hold me to it, but the ballpark of about sort of 500 to 7, or the value, basically the value of Nicholson House. So 500 to 850k that we have to manage. So how are we going to do that without? So we've got three levers really we're trying to pull. The first one is obviously we're going to continue to double down and try and sell Nicholson House. The second one for us is we're really trying to push through with our customers and doing things like how to actually sort of getting some sort of giving them inducing offers to actually prepay for some of their subscriptions that they're actually going through, and looking at the sort of new business side of things. And lastly, would resort to shareholders for that kind of quantum. So it's something we are working very hard to try and manage our way through that, with shareholders being the last resort at these kind of prices. Hopefully people take a different view on this. We think the rating for GETECH is just crazy at the moment, but the market is the market, and we'll see where it goes. But there is an incredible good future for GETECH. I think going back to one of the slides earlier on about the amount of money that's actually coming into the market versus our market cap, or for data-led companies, we are in a very difficult position with the share price is making our life for growth harder than it should, and we're working to see how we can reset on that. Can you confirm the costs related to H2 Green are now de minimis and the company will not repeat an error pursuing speculative investments that don't generate immediate revenue for the future? Yes, we can confirm that. So that is, we are managing Shoreham within our existing resources for the company. There's no Edinburgh office. So H2 Green it is just kept there. It has taken us into an interesting place, as Chris said. It's really helped us with natural hydrogen and things like that in terms of sort of strategic direction. And no, it's not going to happen again. What we're seeing, what we know, is that investment was out of kilter with GETECH and who we are. What we're trying to do, we are trying to kind of get more value for our data with royalties and carried interests, but that's us providing sort of data and services, getting more value from our data and services at the beginning of the exploration cycle when we add most value. But we're not on the hook for sort of when the decision to mine is there. We're not on the hook for sort of covering our quarter of or our percent of mining costs and things like that. So that is very much out. It's very much about getting GETECH back onto a sustainable footing, back into making profit as quick as we can. The results say that the directors forecast that there may be a need to secure additional funding in the short term. The target has made that to mean that there is placing on the way and will carry out a significant discount on top of the current share price. I think it's very similar to one of the previous questions, and one major shareholder has been supportive and exited the business. This is correct, and I think has the statement been misinterpreted? I think, as everybody knows at the moment, auditors and boards are absolutely ultra cautious in what they're saying. I think one of the things we've been trying to do as a business, sort of rightly or wrongly, history will tell us, but the future will tell us, but we've been trying to run GETECH within our cash means. We've been trying to actually not go out to investors for money. We've been trying to restructure in such a way that it can be done within our means. And as I said previously outlined, we were going to do this by the sale of Nicholson House. And we've been a little bit stymied by the property market, which is, as we're heading into this election, people just seem to be stopping. I guess people are looking to see where interest rates or whatever that's going to be, taking views on that. But Nicholson House will sell at some point, and we will get that cash back into the business. And until that happens, we've got to look at creative ways of either bridging or prepayment by customers, or talking back to shareholders. And the scale of the loan or scale of what we need to do now is very small. As you've seen from what Andrew said, the 5 billion loss obviously on the top line looks absolutely horrendous. But when you appreciate that's actually taken out the H2 Green costs that were there in 2023, we've taken all the hits on restructuring, so that in 2024 and going on, we've got a really clean company. So we're doing is all I can say is we're doing everything we can to manage that situation. The company is doing a lot of great development, but if the size of investment spend leads to dilution via share issuance, existing shareholders will not benefit. Can you affirm that any placing will have a significant open offer element? I can't actually confirm that right here and right now, but I think we are absolutely super sensitive to the fact that if we did go down that placing route, and I do say, and I stress, if we do go down that placing route, we think, you know, it's incumbent that we take that offer to all shareholders, you know, to see us, you know, from what I see us as a business, is we're 90% of the way through the restructuring at the moment, and we just need to get through that final bit and move us on our way forward. I can commit to doing everything I can to make sure that it's made available to the widest number of shareholders. Your broker Cavendish is forecasting medium-term revenue growth rates of around 20% PA with improved gross and EBITDA margins due to operational gearing. Where do you see the drivers for growth? Well, I think the biggest thing about GETECH is we're pretty well a fixed cost business. So for every 1.2 million, I think it is, that we add to applying, we get 1 million of EBITDA coming through to the business. So for us, it's really about, you know, we've done the hard work of cost control. It's now about adding more customers to the business, to Globe subscribers, in the same way, you know, typical tech business, we want more subscribers on the platform. And it's trying to increase the value of that subscription by offering more in terms of AI workflows and things like that to add to them, so that they want to pay more for their subscriptions in future years, or a premium subscription on top of what they're already doing. If you're doing what the AI unicorns are doing with better data and more experience, why wouldn't these companies simply buy GETECH out? Well, I think, you know, what can I say? I wouldn't be surprised if there is interest in GETECH as we move forward. You know, we are talking to these AI companies. Some of them, these AI companies, are actually customers of ours. We know each other. But I think from our perspective, we think as a team, you know, we've got a lot we can offer, and I think we would put any reasonable offer that we think that values GETECH fairly to investors, so investors can take a view on that. I think, you know, the assets in the company is the world's largest sort of commercially available data set of magnetic and gravity based data, which is at the core of it, and it's worth substantially more than our market cap. And we would want, but that said, we would put any sensible offers to shareholders. But in the meantime, I think we're really confident as a team we can grow in our own right. Technology associated with the energy transition is continually developing. How does GETECH assess the potential impact of these on its business? I think that's absolutely true. I think the technology is there. I think there's very specific needs for things like copper and aluminium for what actually goes into the production of renewable energy systems and distribution systems. Battery chemistry is always changing. You know, lithium is very much where things are at the moment, but, you know, solids, more static, non-car batteries, and more looking at sort of other sodium type of chemicals over the future. I think in any of these scenarios, people are always going to be looking for resources. So for us, it's about them helping them manage their supply chain. So it's the selling spades to the gold miners type of approach. At the moment, the industry is looking for copper and lithium and natural hydrogen, and we've got the algorithms tuned around that. If other subsurface things come through, we'll tune the algorithms accordingly. I think GETECH's been late to actually get involved with the energy transition, but now we're in it. I think we've got a very broad addressable market that we can go and talk to. Against the backdrop of widely publicized risk averseness on the part of UK institutional investors, how does GETECH tailor its capital market strategy? It's actually work in progress. I think when we sat down at the beginning of this year, what we wanted to do as a board, given where the market, we're in a real difficult, interesting position really, I think, because we're listed, which brings certain things to it. And I think what we wanted to do is go out to people with a growth story, not a loss making, not we need to cover losses to do that. So what I've been focusing on is really getting us back to taking the hard decisions so that we are getting back into a profitability story that we can go and talk to people about future earnings rather than a venture capital story that we need to actually develop something along those lines. It is a bit frustrating, seeing all the money flow into these private companies at the moment for this. It's something we were considering before the drop in the share price, and now we're really trying to work through it. I'm afraid it's work in progress. Happy to talk about that more offline as we move forward on things. Why has the board made the catastrophic decision not to set out a fundraise before notifying the market of its distressed cash position? This has seen the SB fall by 2/3 and has seen a major shareholder completely exit. Why has the situation been so poorly mismanaged? As I say, I think I think we sort of answered that sort of question, and honestly, I think what we had very much predicated ourselves on, as I say, was selling Nicholson House to actually cover the cash flow for this year to actually get us to profitability. That actually went into auction at the beginning of June and didn't sell, which was quite a surprise to everybody, and has made us have to rethink. I personally think the share price has well and truly overdone. It was very, very sad to see such a major shareholder leave, and particularly somebody that's been very, very supportive of me and the team, and it's with quite a lot of regret actually that has actually occurred. As I say, I think we know where the hole is. We're working on that, and I'm going to have to keep you sort of appraised as we move through the future.
I think it's important to caveat the point about the auction was that almost nothing on that auction sold.
Nothing.
It wasn't just our property. It's
true. I think we've come at this just at the time we've got the election, and I think investors are generally kind of wait and see. So that will go back into auction, and we will sell that. We have a very high degree of confidence. It's just a question of when. Under the current strategy, has the approach to managing customer relationships changed? Yes, it has. It is. So it's been enhanced. I think what we're seeing is the GETECH team, a good sales team, but they've been very much focused on selling to the chief geologist within large organizations. What we've really been working through is a lot of account management training to really widen that net and see how they can actually access other budgets within the company, particularly like innovation budgets. We saw this with some of our other clients where sort of something like natural hydrogen fell into innovation, and we're trying to get them to account manage the customers we've already got. We've got fantastic customers on our books, and it's one of the things I just look at it, it's quite astonishing that we're only getting such little money out of them. So account management, training people, getting the right wider proposition out to our market is very much key to that. The going concern statement appears dependent on the timely sale of Nicholson House. Given this not been on the market for some time, is there not a significant risk that the sale does not complete before the working capital facility expires in June 2025? We don't think so. We've offered it in auction with us as a tenant, which is a yield of, I think it was 12% on the reserve price. We think it was just very big, as Chris said, it was very poor market timing, that people are just waiting for the election to get out of the way. We can't, we're we can't believe it's a modern steel and glass office located in a growing economy. We think it will sell. We don't see that as being a major risk to the business, certainly on a 12-month horizon. On a 3-month horizon, it's a challenge. On a 12-month horizon, we don't see an issue. Positive trading, the company says targeting cash flow position, positive trading 2024. How does the current revenue rate compare to the 5 billion current cost base? So as you see from the Cavendish numbers, we're trying to get to 5.5 billion of top line this year. That for us will then kind of exceed the break-even point. We'll keep you as praised as the year goes on. One of the things that's, from getting into the management of GETECH, it's always a bit of a scary thing because so 60 to 70% of the revenues always come through in H2. But we've got good visibility of them this year. We at the moment, we're confident we can actually get to that point. Given the positive story you're telling, why have you not strengthened the balance sheet, given the auditors have qualified their going concern basis? Is this holding back the business back? What's the plan re-equity issuance? I think we've really told that story to death, and I can really see why we're telling that. People are asking that question, is that we're acutely aware of share price and things like that. I think what we've been trying to do, it's a really tough market out there, and we want to go out to people with the positive story, but with the fact that, the positive story plus the first milestone. For us, the first milestone is that we've actually gone from being a loss-making business. GETECH has been making a loss for many, many years, and you go and see some institutional investors and you get a big yawn of, oh yeah, it is GETECH again. And we really want to be out there with not just a positive story, but hey, we've actually turned the corner on this one, and we're asking you for money for growth. We're asking for more salespeople, more marketing people, more data scientists. And we're getting to that point. We really are getting to that point, but we want to do it in the least dilutive way to shareholders. And obviously the share price movement at the moment has really added a challenge to that level. As I say, that's happened in the last few days. We need to kind of see out the week, but we're confident we'll get back and addressing this. How has AI ML capability been introduced to GETECH? It's actually the team's actually been working on it for a long time. We've been sort of using a number of sort of ML techniques, for the last sort of 4 or 5 years. I think what we've seen as we've gone into the into getting our products used by the industry, particularly with the nascent kind of natural hydrogen industry. For the first time, people are looking for natural hydrogen. It's never been looked before, and it's sort of found in these ophiolite kind of rock sequences that people haven't been looking for. But we found them in our data, and what you try and do is the real trick. The exciting thing is, these are all over the planet. You want to find where they all are quickly. But where GETECH really adds, we come in with this kind of sort of 3-pronged attack that's very unique to us. Is not only we can say where sort of ophthalites are, we also have, from our oil and gas industry, we can start looking at actually, well, the gas might have migrated and it might be trapped here. So you might be able to see where potentially commercial reservoirs are. And thirdly, with the geospatial techniques, it's, natural hydrogen needs to be somewhere where you can use it. If it's in the middle of the desert somewhere, it's not like natural gas that you can pipe it. You've got to do something with it. So it's finding this perfect trinity where you kind of got the producing rocks, the potential seals, and the potential industry user around it. So we add a lot to that. Are there any new partnerships in the pipeline? Yes, we're working on a number of things like that. That's forward-looking statements. I look forward to keeping everybody appraised of that as we move forward. If the company goes the placing route, will management commit to put a material amount of capital given the positive future? And the answer to that is yes. I think one of the things that we've been doing, there's a number of things we've been doing. So all of the board has been deferring salary into a pot to go into any placing when that occurs. And we will all be looking at where we can do things individually to do that. So the answer is most definitely yes. Speaking for myself, I'm very, to me, this is the last problem that GETECH is going to face from its cash management position. We're very confident of the future beyond this. And I think that's answered all the questions. Thank you.
Absolutely, Richard, Chris, Andrew, if I may just jump back in there, and thank you very much indeed for addressing all of those questions that came in for investors. And of course, if there are any further questions that do come through, we'll make these available to you immediately after the presentation is ended, just for you to review, to then add any additional responses, of course, where it's appropriate to do so. And we'll publish all those responses out on the platform. But Richard, perhaps before really just looking to redirect those on the call to provide you with their feedback, which I know is particularly important to yourself and the company, if I could please just ask you for a few closing comments to wrap up with, that'd be great.
Yes, thank you. I think it's, please don't underestimate. It's been a really, really tough year. Sort of trying to pass through what sort of the investment that's gone into the various business units, and actually what is actually going to come out and grow. And we really do believe we've made those decisions. You look at that sort of curve of where we're going. We're 90% through sort of restructuring the business. We don't want to see it fail. And not going to fail at this point. And we want to do everything we can to protect shareholder interest, current shareholder interest, as we get through that last point. The services for GETECH we think are very relevant to the energy transition. We've got them now into the right place. We're getting reference customers across all of our the vertical sectors that we're targeting. And yeah, please watch this space, and we really do hope that we can count on everybody's continued support. Thank you.
Richard, that's great. And thank you once again for updating investors this morning. Could I please ask investors not to close this session, as you'll now be automatically redirected for the opportunity to provide your feedback in order that the management team can really better understand your views and expectations. This will only take a few moments to complete, but I'm sure will be greatly valued by the company. On behalf of the management team of GETECH Group PLC, we would like to thank you for attending today's presentation. That now concludes today's session, so good morning to you all.